If I look backward, as you well know, Tesla accounts for almost a fifth of the return that you have generated in that 5-year time span. Which of your current holdings, Cathie, do you think will supply the biggest lift in the next 5 years?
Tesla's still in the running, but I would have to say the biggest upside surprises are going to come from the genomic space. And that's because the convergence of DNA sequencing, artificial intelligence, and gene therapies, importantly, CRISPR gene editing, are going to cure disease. That convergence is going to cure disease.
So 2020 was a crazy year for most of us, but yet again, Cathie Wood had another incredible year. Her 5 ETFs all outperformed the stock market. However, there was one which really stood out: her investments into companies focused on finding and editing human genes. So imagine a future where you don't wait until you've got a disease. Instead, you go to your doctor, they map out your genes and look for anything that's changed since your last visit. If they notice an error or a difference, they can simply correct it back to how it should be. No need to wait for an illness to form to treat it, or no need to even develop symptoms in the first place. Simply wipe out the disease as soon as it appears in your genes. Now, I don't know about you, but I always think about that film Gattaca when people start talking about editing genes. I mean, it's pretty scary stuff in some ways, but clearly the stock market doesn't have such fears, because Ark's ETF, which is focused on genomics, returned an incredible 178% in 2020. And interestingly, this is one of Ark and Cathie's only ETFs without Tesla in. So this ridiculous 178% hasn't even been influenced by Tesla and their skyrocketing share price. The name of this ETF is the Ark Genomic Revolution ETF, with a ticker symbol of ARKG. In this video, I'm going to explain to you what the genomic revolution is, why it is outperforming other investments today, and we'll talk about the top 5 companies that Cathie has invested into in this sector. Hi and welcome back. My name is Tom Heavey. I hope you're doing well. Let's get into it. But first, if you live in the US, Webull are currently offering this crazy deal right now. Open an account with them and you'll receive 2 free stocks worth between $5 and $500. Deposit $100 into your account and you'll receive another 2 free stocks worth an extra $16 to $3,200. So in total, that's a minimum of $21 free and all the way up to $3,700 free. All you have to do to claim your 4 free stocks is use the link in the description below. Right, so let's get into it. Cathie and a team at Ark invest into technology based on something called Wright's Law. Wright's Law basically states that as we produce more of something, we become more efficient, and so it becomes cheaper to produce. Specifically, Wright's Law tells us that the cost to produce something drops by a certain percentage every time we produce twice as many of that item. And this is really important because there are so many technologies which could change the world in the future, but they simply cost too much today. And in finance, there's a saying that being too early is the same as being wrong. With her investments, Cathie Wood wants to make sure that she's only investing in technologies when the costs have dropped to a level where the technology is actually ready to disrupt. Now, the genomic revolution can be thought of in 2 parts. The first is really mapping out our genes, and that basically means creating a long list of our gene sequence so that we can take a greater look into what our genes look like. The second part is editing our genes. As the name implies, that means making changes to our genes, such as editing out errors that can lead to disease. So basically, first you need to map out the genes to see what they look like, and once you've done that, then you can begin to make changes. According to Wright's Law, for every cumulative doubling in mapping out our genes, the price drops by 28%. And that means that back in 2010, the cost to sequence our genes was ridiculously high at over $100,000. Clearly, at those kind of prices, the technology, well, is interesting, but it isn't ready to be used by people like you and me. Over time, however, these costs have fallen. In 2020, they are now around $3,500. So in 10 years, the costs have fallen by 97%. Quite remarkable, but still perhaps not quite ready for mainstream adoption just yet. Well, according to Ark's estimates though, the cost to read a whole human genome will be under $1,000 by 2023 and as low as $100 to $200 by the end of 2025. Again, going back to the point about timing, we can see just how powerful this is here. And this creates an interesting opportunity, because if gene sequencing achieves mainstream adoption, it will cause the market revenue to expand from $250 million in 2020 up to $5 billion in 2025. And that would imply a growth rate of 82% per year for the next 5 years. The second stage is gene editing. For Cathie, this is where CRISPR gene editing comes into play. Gene editing actually began in the 1980s, with the first targeted gene editing performed on yeast cells in several labs. Now, I even remember learning about gene editing at school and really thinking to myself, I mean, it sounds like an interesting concept, right? But it's been around for so long and it still hadn't taken off at the time. So why would it take off anytime soon? Well, CRISPR, the type of gene editing that Cathie Wood and Ark are focused on, was only discovered in 2012. And this has rapidly accelerated the pace of developments ever since. Compared to other editing techniques, CRISPR is much faster and cheaper, as we can see from this table. As a result, the amount of gene editing taking place has grown quickly in recent years, and that has led to costs falling, according to Wright's law. If gene editing can be used to address monogenic diseases, the companies in this sector could yield approximately $30 billion revenue per year in the United States and $75 billion globally. By the way, if you enjoy this type of video about investments into innovative technology, make sure to subscribe for 2 new videos like this every single week. Okay, back to it, because there is another layer to this. Many of us are going about our lives today with small mutations in our genes, and they aren't a problem today, but they could affect us in the future. Maybe it's 5 years down the line, maybe it's 50. And I know it sounds kind of freaky when you think about it like this, but it's really nothing to worry about. It's probably just what happens when you think too much about your own genes. Well, Cathie Wood and her team at Ark believe there is a one-time initial opportunity to fix those tiny genetic issues that we all have, which could someday lead to something else. And this creates a one-time opportunity of $1.9 trillion globally. Importantly, this would also save large healthcare treatment costs in the future. So it's like an investment today to save health and expenses further down the road. On top of that, monogenic diseases, this is when there is an issue with a single gene, only represent 2% of all disease. While CRISPR is still relatively new and it's not likely to be able to tackle polygenic diseases anytime soon, the market size for this would be 49 times larger than what I just described if this became possible in the future. Gene editing also has uses in agriculture, with an estimated $170 billion opportunity when combining livestock, crops, and aquaculture. So, now that we have a rough understanding of the genomic revolution, first mapping out our genes, and second editing them to remove disease, now let's talk about how this all fits together in Ark's Genomic Revolution ETF. Cathie and her team actively invest in companies that they believe are the most likely to succeed in this emerging market. The ETF has a ticker symbol of ARKG, which you can find using the link to Weeble's platform in the description below. It launched on October 31st, 2014. They charge a fee of 0.75% per year, and they have just under $8 billion under management. Since they launched in 2014, they have averaged a return of just under 30% per year, far higher than any other indexes and nearly all funds around. Now, I'm going to talk briefly about Cathie's 5 largest investments, but first you should be aware that I am not a financial advisor and this is not financial advice. You must do your own due diligence and your own research. Also, consider this for a second. Ark have only been running since 2014, which means they have only been operating in a bull market. We haven't seen how Ark would perform in a full market cycle, including a bear market. That's why, as much as I personally am a big fan of Ark Invest and Cathie Wood, I'm an even bigger fan of diversification. I always make sure I'm invested in a wide variety of different things. Now, with that all said, let's look at the top 5 companies in this ETF. So, looking at their holdings, we can see that their largest investment is into Teladoc Health, with 8.3% of their portfolio invested into the company. Teladoc Health delivers, enables, and empowers virtual care services that span every state in a person's health journey, from wellness and prevention to acute care to complex healthcare needs. Essentially, Teladoc uses a virtual-first method for healthcare, by connecting patients with doctors through the use of technology such as video calls. Basically, during 2020, the company has seen an explosion in popularity, and it's not really surprising with people being forced to stay in their homes, and of course the need for healthcare being so important. However, there's really a long-term trend here as well, past just 2020. My mum actually used to work in a doctor's surgery, and she was constantly talking about how some older patients would struggle to make it into the surgery. She was a big fan of doctors doing video calls with their patients. I mean, for some, it can be a lifesaver. Adding to this, the company continues to deliver robust revenue growth with a compound annual growth rate over the last 5 years of more than 70%. Institutional investors especially like that over 80% of Teladoc's revenue is recurring. Even better, the telehealth leader has only begun to scratch the surface of its opportunity. In the US, there are 65 million members at current Teladoc clients who are not members yet. That's nearly as many as the company's 73 million current members. And there are another 182 million Americans who don't work at current Teladoc clients. The challenge for Teladoc going forward will be to capitalize on its opportunity without skipping a beat. Its shares currently trade at 23 times sales. Now, stocks with such premium valuations, they can sometimes be volatile. In second position, making up 5.3% of their total investment, we have Twist Bioscience. Twist Bioscience is developing a technology platform for synthesizing DNA. The resulting synthetic DNA can then be used in genetic engineering experiments. Essentially, they provide synthetic DNA to other companies, and that then means those other companies can run tests on that DNA. So here's a quick clip to explain it in more detail.
Meet a streamlined way to order the DNA you want online. It's simple. Use one of our handy templates or drag and drop your own file. With our live sequence analysis, you'll know the pricing of each gene. Easily edit your sequences with our gene editor. Choose between gene fragments or clonal genes. Simply check out. We'll verify your order and keep you updated. You design it, we build it.
In third position, with a total of 5.3% of their holdings, we have Pacific Biosciences. Pacific Biosciences develop gene sequencing systems. So this is the first part of the genomic revolution that we discussed before, mapping out our genes. They created single molecule real-time sequencing, which allows for highly accurate and reliable real-time analysis of genes. In October 2020, the company also inked a research collaboration deal with Invitae, further showing how Pacific Biosciences have unique technology which is being well respected across the industry. In fourth, with just under 4% of their holdings, we have Regeneron Pharmaceuticals. Regeneron is a leading biotechnology company that invents life-transforming medicines for people with serious diseases. They have 8 FDA-approved treatments and numerous product candidates in development. In recent news for the company, early data is showing that the antibody treatment that they've produced has been shown to temporarily protect against the 2020 illness. Now, when I say 2020 illness, I think you know what I'm talking about, but I can't actually say those words because YouTube still shadow bans videos that say the words. YouTube are a bunch of wank. Regeneron's antibody treatment reduced infections by half in people at high risk, and none of the patients receiving the drug developed symptoms from the illness. Again, these are just interim results, but still clearly promising. In fifth position, at 3.9% of their total investment, it is into Exact Sciences. Here's a short clip explaining what the company are all about.
Early detection is everything. A lot of people are either embarrassed to do colonoscopy or are fearful of it. And it's a big problem because if those people would get screened, then they'd have a chance to avoid this terrible, terrible disease. Exact Sciences is a company committed to the eradication of colorectal cancer, and we have developed a non-invasive colon cancer screening test so that people can be screened for colon cancer in the privacy of their own home.
Recently, the company disclosed for the first time significant and compelling data for its multi-cancer liquid biopsy screening test. The test for 6 different types from its decade-long collaboration showed high overall detection sensitivity of 86% with 95% specificity. Up until this announcement, investors have mostly been focused solely on the company's long-term growth prospects of its Cologuard franchise in the $18 billion annual colon screening market and the company's 2019 acquisition of Genomic Health. This announcement, though, highlights a third leg of growth. Now, at this point, I want to play you a quick clip from a recent interview with Cathie.
I do want to warn investors that, in the investment world, it's not just straight up and to the right. We will have those corrections. So again, we just keep our eye on the prize. We have a 5-year time horizon. We are fully invested at all times, which is what we are supposed to be. But that doesn't mean that investors shouldn't, sometimes take a bit of money off the table and keep some powder dry.
So Cathie is making the point here that investors shouldn't just expect the charts to keep always going up and to the right. I mean, many of these companies have performed extremely well over the past 12 months, and therefore some people would argue that maybe a pullback is due. I've also highlighted earlier that we haven't seen any of Cathie's investments in a full cycle, including a bear market. We've really only seen them in the bull market. We need to see a full market cycle to know how these investments might pan out in the long term. But what I think is really interesting is in Cathie's focus on innovation, her understanding that we must look at investments for the long term, a minimum of 5 to 10 years, and the emphasis that she places on timing her investments based on when the costs have fallen to a level where some of these kind of futuristic sounding ideas could actually become our reality. Let me know your thoughts in the comments. Are you a fan of Cathie like I am? Which of her ETFs do you think is the most interesting? Is it this one or is it another one? Subscribe if you want to see 2 videos like this every week. Thank you for watching, and I will see you again very soon.